all infrastructure is important. But unfortunately, because of limit of resources, we have to prioritize. And this is really unfortunate because it implies some infrastructure is less important than other parts, which is not the case. First, I'm going to define infrastructure rather unconventionally to include human capital in it, because it's an underlying asset that we need to continuously invest in. Its returns are medium to long term, and we cannot afford to take our eye off that ball. So human capital underlying everything else. Then I'm going to say power and transport and attach water to it, because power and water actually often go hand in hand, in the sense that when you're building a dam for hydro, you can use the same dam for irrigation. So those two, and clearly when you're doing your manufacturing, you often also need those two. But it's no good manufacturing stuff, as already has been pointed out, if you can't get your goods to market. And I think it's very interesting that Archer pointed to intra-Africa trade statistics and highlighted the fact that 6% of the 12 intra-Africa trade happens in SADC. And that is because SADC is invested in creating a market which goes beyond just one country. But what goes with that is also infrastructure. So I would say power, transport, water, and of course ICT. ICT, why? Because we live in an information age. Your trading is supported by information flows before and after the movement of goods. So that is absolutely pivotal. So I think the identification of which parts of infrastructure is the easiest bit. The next challenging element is, how do we resolve these issues? What are some of the structural issues we need to pay attention to? Again, I come to the SADC example. It means the structure of our markets must change. We cannot continue to define the market's place on the basis of the boundaries of a country. It just is not economical. So Africa has to integrate. The ADB, for instance, spends about a quarter of its resources on projects which are regional integration projects in recognition of this factor. They are much tougher to put together. As you can imagine, negotiating with different jurisdictions, although all of them African, they move at variable speeds. And to close on a regional project takes a multiple in terms of time of what it would take to close a project in a single country. But the emphasis absolutely has to be regional integration projects to create a much bigger marketplace, which is attractive to commerce. Because at the end of the day, when we're talking about growth, we're talking about commercial activity. And that's where we have to focus. The next challenge is, how do we de-risk or manage the perception of African risk? Fascinatingly, the current crisis, in terms of facts, has demonstrated that actually the African risk is not as high as we perceived it to be previously. Unfortunately, the world still considers Africa to be very risky. Although the world is coming around, and I'm going to jump a little and come to the issue of FDI, my view is that although FDI is a very good thing, the fact of the matter is that FDI will always follow what happens domestically. In other words, if I'm sitting outside of a continent, of a country, and I see the citizens of that country or continent taking their money out rather than investing it internally, I'm going to think they know something I don't. And so I'm going to keep my money out. For me, therefore, the logical sequencing has to be that African governments must pay a lot of attention to retaining African capital. We know that there is a lot of capital flight out of Africa. And I was almost lynched at one conference when I said, this is a good thing. Why? Because it shows that Africans understand risk. And this was taken as a flippant comment. Yeah? But it is a serious comment, because it means if African governments are able to retain African capital, there is, I can call it cheap money, easy money, because the African entrepreneur understands domestic risk much, much better than a foreign entrepreneur will understand it. The hurdle rate psychologically for a local entrepreneur will always be lower than that of a foreign entrepreneur because of all of matter of things. So let's invest in making our markets bigger than our countries. Let us invest in retaining the capital that we already have. And then FDI will follow. I think at the moment the problem is that we're focusing too much. We're putting FDI ahead of domestic capital. And I think we ought to do that in reverse. The next thing about this issue of de-risking is how do we get a smart partnership between the public and the private sector? The reality of infrastructure investments is that the amounts of money required are so large that government alone, one could say government alone doesn't have the money, or one could say government should not, in fact, be putting that money into infrastructure if the private sector can be brought to be a partner. But the structuring of these transactions absolutely has to rely on what the public sector role is in partnering the private sector, the risk sharing, de-risking, maybe even underwriting of the returns upfront for some period. So a smart partnership has absolutely to be struck, which leads to the fact, where should these dialogues be taking place? We're having this conversation in Davos, in Switzerland. Shouldn't we be having more of these conversations in Africa someplace as an African dialogue, if we're going to be trying to make African private sector and African public sector find the solutions in the first place, and then get our friends in the FDI world to absolutely come along? But the starting place has to be amongst ourselves. So I think it's an absolutely important point. And on that point, I'm glad to say, listening in the earlier parts of this dialogue, I was very heartened because both Archer, the minister, they used a word which was music to my ears. This is an opportunity space. It's not a problem, it's an opportunity space. But if that opportunity is perceived by foreigners before Africans perceive it, I think that's a tragedy. Yeah? So let's talk amongst ourselves, let's identify it as an opportunity, let's address these areas, but let's make sure that we structure a smart partnership.
Doing business in Africa, you can't afford to be without Africa Investor.